mics over there? Or I'll get it to you. S'il vous plaît. Ah, vous les avez déjà mis.
There's.
You already have
Okay.
it. Okay. Perfect. Thank you. And after that, we'll be heading for lunch to the rooftop. Okay. Thank you.
Thanks, Aldi.
All right.
Hello. Welcome. Still good morning. Thank you for being here.
Well, it was afternoon.
Yeah,
It's
getting
almost.
close to lunchtime. Thanks for joining us, Cynthia.
Yeah. Well, great to be here. It's fantastic to be here in Cannes and to be part of EthCC. Wonderful to hear about what's happening among the developer community in the Ethereum ecosystem, and great to see so many other collaborators here this week. So really glad to be here.
Thank you for that. And maybe we jump straight in.
Yeah.
Then, Cynthia, if you can tell us a little bit about Fidelity, the history of Fidelity, with regard to digital assets and crypto.
Yeah, so Fidelity, led by Abby Johnson, who is our CEO, was very early in digital assets. Abby tells the story about how she was introduced to Bitcoin back in the 2013-2014 time frame. And she was introduced to Bitcoin as what it was at that point, which was still being thought of as an alternative monetary system. But what she saw was that there was an underlying technology that was very transformative in terms of the way in which value is stored and can otherwise be transacted. And within the asset management industry and within financial services, that very quickly becomes very profoundly impactful on the way in which our capital markets and capital overall, and of course financial services, can be composed and ultimately delivered and created for solutions for our investors. And I think that it was that early realization that this technology is more than just some funny internet money and could really be very impactful overall on our financial system is when she really pushed for more internal resources to be allocated to research and development. And so that was the early days of our technical, we have a division within Fidelity called the Center for Applied Technology. And this is where all the fun stuff gets to happen. We have developers who are working across a range of technologies that are or will be impactful on the way in which our investors and our markets operate. So blockchain is one part of that division. They also look at quantum computing. They look at alternative reality, AI, and virtual reality, and a range of other interesting technologies, and all with a lens to evaluating what the impact might be on our investors and on our markets. And they were the early developers of what came to be the proprietary custody solution that Fidelity built and launched in the 2018-2019 timeframe.
Thank you for that. And how about now? How about you and your team? What priorities are you focused today?
So we started a dedicated division within the asset management part of the organization in the beginning of 2023. So January of 2023 was the year just before the launch of the ETPs. That dedicated, or the decision to stand up the business within asset management was driven by was largely a recognition that there were a number of us within the asset management division at Fidelity, myself included, that had been involved in a range of activities supporting digital asset research, doing product development largely on the side, but not dedicated within the asset management division, surrounded by the rich history that asset management has around building out research capabilities, proprietary research. And so when we decided that it made sense for asset management to dedicate a division, I was asked to lead that division. And the vision that we established for digital asset management was not putting a bunch of funny tokens in a couple of funds and calling it a day, but wanting to think more holistically around how does this technology impact asset management. And asset management we think of as portfolio construction and research, and so we've built out a team of dedicated research analysts and an operations team to support the data that is very important to our research analysts in how they think about portfolio construction and trading. We have our own dedicated trading desk, which does all of the trading and manages our capital markets relationships with liquidity providers for the ETPs that we have managed. Last year, we launched our first ETP that includes staking for Solana, which we were really excited about, and that represents the progression of the growth of the investment function in being able to participate, not just in being able to provide exposure and assets to our clients, but now increasingly providing more access to on-chain investment capabilities like staking. The other component of the vision for digital asset management was much more of that long-term view on infrastructure and bringing assets and value on-chain. And where we started with providing on-chain assets in off-chain wrappers, which is expanding exposure across our customer base. When we launched our tokenized money market fund last summer, that was about providing an on-chain wrapper with off-chain assets. So now you've seen from an asset manager's view, you've got on-chain assets and an off-chain wrapper, or off-chain assets and an on-chain wrapper. Where the vision for asset management ultimately, where we can stop calling it digital asset management and we can just go back to referring to asset management, because as I've said for a very long time, when we talk about finance, DeFi, TradFi, finance is finance. It's about the access to capital. It's about how you price that access. And from an asset manager standpoint, when we talk about orchestration, what we do is we create portfolios and financial solutions. Customers aren't asking us to buy tokens. They ask us about financial solutions and how we can help create better and more accessible financial solutions. And this is where we think digital assets and creating that infrastructure to now allow for on-chain assets to be held in an on-chain portfolio, that is truly going to give you that more direct access to capital that isn't going to be limited by the intermediated traditional market hours that we live in today.
Yeah, no, I was sharing some stories with Cynthia before. Innovation isn't easy at times. We were sharing some stories, working the trenches. Before Kaiko, I had my own small ETF startup in the US. We were also applying for a crypto-related ETP with the SEC.
Yeah.
Very difficult times. So as you mentioned, TradFi and DeFi and TradFi emerging, what does it mean for maybe less so the products, investors, just Fidelity itself? How does that look like for a company like large company like Fidelity?
Yeah. So as we've approached our product roadmap, and you know, that was the funny part of when you and I first had our conversation preparing for this talk, was you know, sharing some stories about our background and realizing that what you talked about in working in the trenches and in bringing an exchange-traded crypto ETF to market. You know, the overall journey for all of the issuers that went down that path was about a decade, was when the first filing was done by the Winklevoss twins at Gemini. We picked up the effort and the engagement with the regulators about 4 or 5 years after the beginning, and that journey even for us was, you know, a good 5-6 year long period. So and that advocacy didn't even end at the launch. We only allowed for and got the regulators comfortable with in-kind creations and redemptions, which is more about increasing the efficiency. So I would say persistence is incredibly important when it comes to innovation. If you think you have a great idea, the answer is you probably do. Not always, but you probably do. And so persistence is really just about continuing to address what the regulators' concerns are, the policymakers' concerns around liquidity, pricing, and the potential for manipulation. Oh, those were our favorite, right, conversations, is how do you define what does that mean, and how do you demonstrate with data what is actually happening in the markets. And so I think it's that persistence and pointing to concrete data to be able to support the way in which the product or the asset is going to behave is really how you're going to be able to see something come to market.
I just got a little more PTSD with the details that you shared of the experience working through that.
Yeah.
Well, thank you for that. Do you see then with the new administration, with the more friendlier regulators and legislation, that the speed of adoption is moving quicker? And maybe in terms of how do you see tokenized assets and some of the newer initiatives and projects that people are looking at?
Yeah. So I would say 3-5 years ago, when there really were quite a few POCs, the proofs of concept around how to demonstrate that you can credibly and safely represent a traditional asset on chain. Those were the early days of just demonstrating that the token can be created, it can be transacted, and it represents the asset. But there was no market. There was no buy-side infrastructure, and really there was no liquidity layer to facilitate the market of tokenized securities to be able to trade. You fast forward, now we have a new administration, and just shortly after the administration, now we also have a stablecoin bill in the U.S. that now has legitimized the liquidity layer for transacting in tokenized assets. So what was missing in the early days of all the POCs, which you need to have gone through that period in order to be able to demonstrate the asset creation. Now, I like to say that's the easiest part of bringing traditional assets and bringing markets on chain, is now we've got to actually create the markets. And the markets require both the buy side and the sell side. Today, we have a lot of assets on chain, but not a lot of buy side infrastructure yet. And I think a lot of that was due to the fact that the regulatory environment was difficult for buy side institutions, whether you are broker-dealer, facilitating access to your investors, or an asset manager creating products. We needed to be able to have that regulatory clarity to build the right infrastructure to access these assets, and then markets have to be created. And now we've got a little bit of that chicken and egg.
Indeed. The building of that ecosystem, right?
Yeah.
So in terms of building that ecosystem, do you, and kind of my thought in terms of a question regarding competitive landscape, is it competitors? Is it partners? How do you see the space developing?
So I think the environment and the point in time that we're at right now in the creation of robust on-chain markets is really about collaborators. It's very difficult to point to any one entity that in and of itself can be the market. I just don't conceivably see that happening. And so we work with and we work across quite a few external parties, whether they are people who are part of our product development ecosystem in bringing products to market. We work with a number of other asset issuers as we continue to think about how do we help to push forward the build out of a market. And right now, the early days were basically trying to scale a product, and now we're working on trying to build out platforms for those products to be able to scale. And ultimately, when you get multiple platforms and see that interoperability of those assets across the platforms, that is where you will finally see the scaling of the market. But we're still in the very early days of bringing assets and investors on chain.
Patience, yeah. It takes, everything takes a lot of work. Then we talked about the technology, the ecosystem. How about on the demand side? Investor demand, does it still, is it there? Does it take a lot of education?
Yeah.
How's that looking for you?
Yeah. I think when it comes to the investor interfaces, I will say this, and I think everybody in the ecosystem will say that DeFi interfaces are notoriously difficult, and so we think of our job as not selling tokens or selling DeFi. Our job continues to be selling financial institution or financial solutions to our investors, and so that is about creating the interfaces for our clients to be able to access solutions. What's going on behind the scenes, whether the assets in the portfolio are custodied on chain, whether they are custodied in DTCC, traditional clearinghouses, is not what the customers are focused on. They're more focused on, what does that financial solution do in helping me to achieve my financial outcomes? Can I get access, liquidity in those financial solutions easily and at a reasonable cost, right? They all care about what it costs to access financial solutions, and they care about how they perform and their ability to achieve what they're looking to achieve in their investment lives. Our job from a competitive landscape is to make it easier for investors to access those solutions and to make it easier for those investors to understand how those solutions are going to fit into their lives. So education is an incredibly important part of what we do every day in our traditional financial solutions. And whether the asset is custodied on chain or not on chain, is I think of less importance to the investor over the long term. But today, it's a lot of discussion because this is a new platform and this is a new market that is emerging.
Right, to the point that you mentioned early on, eventually there's no TradFi, DeFi, it's just, it's all together.
Just Fi.
Exactly. Then before we wrap up, any final thoughts or insights to share with the audience?
Yeah. This has been quite an incredible journey, and having been in the asset management business for quite a few years now, there's never been a more extraordinary time in markets as what we're seeing today. The amount of innovation around how to access capital, how to access investments, I think that's incredibly important. When people ask me, what's so great about blockchain, and I think a lot of the canned phrases around, oh, it's 24/7, it's atomic settlement. I think markets are more nuanced than that, and I like to think of blockchains as really increasing access to capital, and yes, access does include the ability to get capital outside of traditional market hours. It also means that there are going to be new providers that will provide access to capital, and so I think when you think about new distribution and new product and new financial solutions models that are being developed now, that increased competition and that innovation is really what's going to drive better outcomes for investors.
Okay, well, thank you. Thank you so much, Cynthia. Yeah. It's great to have you here.
Thank you. Thank you for having me.
I think.
Question or
Okay.
If you want to take a question.
Sure. Well, we can take a question or two if anyone has a question.
Oh. Okay.
Aha. Okay.
How do you see permission, like blockchains, interacting with permissionless blockchains? If you have any thoughts or insights, there seems to be two distinct layers. And there's a missing sort of connector layer.
Yeah. So I think about markets, and today markets are structured in the same way. You can break down markets as having basically three primary layers. There's an issuance layer, there's an execution and trading layer, and then there's a settlement layer. Sorry, I should probably use this. Okay, and so across those three layers, there is a role, well, really at the issuance layer, I think there is a role for more permissioned blockchains, but the issuance of assets on a permissioned or a more controlled infrastructure layer will need to be interoperable with a public and neutral settlement layer. The settlement layer that we have in our traditional markets today is effectively clearinghouses. And across global markets, there are regional clearinghouses where the participants in the market look to those clearinghouses to provide that neutral settlement layer. And I do think that that needs to be public and it needs to be neutral from that standpoint. So multi-chain, public and private, there's a place and a role for both.
Thank you.
Yeah,
I think we are out of time.
Okay,
And
it says time is up.
time for lunch. Thank you. Thank you so much again.
Thank you so much, Cynthia.
everyone.
All right, thank you.
Thank you, everyone. We're going to head out for lunch now, so it's in the rooftop. You will have a beautiful view and enjoy the lunch, and we'll be starting again here at 1:45. Thank you very much. Speak soon.